Hello everyone, my name is Quang Trung Les and today I'm going to talk about accounting for income tax. My presentation will include in three parts, introduction, body and conclusion. First of all, introduction. We know accounting for income tax is very important for any firm. It will providing an understanding of the various strategy in order to improving profit generation and also allow company to make a super decision based on its capital. For that purpose, our big CSL Limited company is assembled for. Now I will move to my body. The body will be including tax liability and excess, tax expenses and community tax rate, current income, deferred tax assets, tax liability, current tax assets, income tax expenses on the income statement, and income tax paid on the cash flow statement, temporary and permanent different lesson from CSL tax account. Now, if we move to tax liability and excess, AISA 12 tested that both deferred tax assets and liability are recognized in the balance sheet for an organization. Deferred tax liability are recognized by a firm for all temporary taxable difference arises, while deferred tax assets are recognized by a firm for all temporary deductible difference that arise. Now, I talk about tax expenses and companies' tax rates, accounting income. The tax expenses result in the rise in the costs that are incurred by a company. The tax expenses from CSL Limited AFP the year ended 2019 were 422.4 million, and this will decline from the reference years by 52.3 million dollars. The company tax rate times the accounting incomes for the year 2019 is given by 700.3 million, and this is different from the tax expenses of 422.4 million. The variation between two figures arise from the temporary tax difference. The temporary tax difference causes the rise in the future tax payment that are made by an organization. Any changes in the company tax rates lead to either an increasing or the raise in the variation between company tax rise time accounting income and the income tax expenses for an organization. Now, I'm continue with deferred tax assets and taxability. Deferred tax liability refers to the tax that's had to pay by an organization within current periods, but it's hardly been paid. It's important because deferred tax liability will have effect on the accounting profits and tax profits for the firm. Besides, the deferred tax excess occurs when an organization makes an advance tax payment. As we can look at the bar chart, deferred tax asset has increasing from 400 million to around 350 million in 2019, and deferred tax liability also make a decrease around 200 million to 250 million dollars in 2019. Now I move into current tax assets. The current tax assets are termed to as the amount overpaid by an organization. It helps to reducing the future tax to the paid by organization. In CSL Limited case, the current tax asset increased from 6.6 million in 2018 to 21.4 million in 2019. It were keen on reducing its tax expenses. The current taxability for CSL Limited reduced from 244.4 million in 2018 to 162 million in 2019. Now, I will move to income tax expenses on the income statement and income tax paid on cash flow statement. The income tax by CSL company under the cash flow statement are different from the income tax expenses on the income statement. The income tax paid by CSL Limited rose from 424 in 2018 to 527 in 2019. Income tax expenses for the company during the same period reduced from 552 to 422 in 2018. I'm continuing with temporary and permanent difference. The concept of the temporary difference is termed as the difference that arises between the tax base and the current amount of organization assets or liability. The permanent difference that the CSL Limited includes the changes in the research and development expenses from 700 million in 2018 to 831 million in 2019. The two transactions are not reversible, bearing in mind that they have already been allocated to different units for the CSL. Finally, I will talk about the lesson what we have learned from CSL tax accounts case. First of all, we can understand the difference between the different tax assets and liability, how they are important and affect on firm profits. Second one is the variation between income tax expenses and the income tax payable. The treatment of tax in the financial statement for the CSL Limited. The income tax paid by the company falls under the operating activity for the cash flow statement. The payments, income tax and current assets tax are included in the balance sheet for the company. One of the things that I found confusing were the difference between income tax expenses and income tax paid. I know that tax paid by the company are similar across their financial statement. In the case of CSL, the tax liabilities on the balance sheet are different from the income tax paid. And the income tax expenses, I will also face with the difficulty of the ascertaining the permanent and temporary difference by observing the financial statement for CSL company. Now I will do my conclusion. My conclusion will be, when preparing the financial statement, company must ensure that they have to require accounting rules and regulation. CSL company financial report is done based on IFRS regulation. A company also has to identify strategy that it can embrace for dealing with the changes of and rising in the costs that are associated with the tax expenses. Thank you, and I wish you can have some lesson from my part, and wish you a great day.